Welcome back to Fast Market on the TD Ameritrade Network. I'm Tom White, joined by my co-host Kevin Hinks. But let's bring in our next guest for our cash tag segment. That's going to be Andy Swan, the co-founder of LikeFolio. Welcome to the show, Andy.
Hey, happy Monday.
Happy Monday is right. So, Andy, I'm looking at Peloton. It's at post-IPO lows today. During today's session, they're maybe exploring a sale of maybe 15 to 20% of the company. But one of the things that stuck out to me, Andy, is I understand people are going back to the gym, but 92% of people that have Pelotons after 12 months still have their subscription. So people that have it love it. What kind of data are you guys seeing out of LikeFolio on Peloton into these earnings?
Yeah, really good setup there. I think you kind of nailed it. This is a company that makes the customers it has extremely happy, but unfortunately is growing at a slower and slower pace. In fact, when we look at what you're talking about in terms of people returning to the gym, you can really see it in some of our consumer macro trends data, where people talking about canceling their Peloton subscription is up a little bit year over year, canceling and working out at home down a little bit, Peloton app usage down a little bit, but attending group classes or opening a new gym membership is up a little bit. So you see that shift from that pandemic-induced working out from home, which really pulled forward tons of demand into Peloton overall in the 2020 and 2021 years during all those lockdowns. And so it feels like a lot of people that were ever going to buy a Peloton, which is an expensive piece of equipment, really did so during that 2-year period. And now the company is out there marketing a pretty expensive product, although there's price cut, pretty expensive product to a smaller and smaller group of potential buyers. And so that's what happens when a company like this gets a absolute frenzy of pull forward demand. And we can see it when we look at, LikeFolio purchase intent mentions around Peloton. That's really showing that in 2020, as the pandemic started, everyone shifted and said, hey, I've got to be able to do something from home. I've got to be able to do something that I have complete control over. And Peloton was right place at the right time. You can see it in the green line on this chart, the absolute explosion in consumer demand for this company's products well before the stock price went significantly higher. And then now the green line purchase intent mentions decidedly lower, and the stock price has followed suit. And so where we're at right now, I think Peloton's going to have a very tough time putting together a quarter that is impressive. I think there's headwinds. They've got their own internal problems. There's a lot going wrong. So going into this report, we expect some pretty nasty looking numbers. But long term, like you mentioned, this company creates very, very happy customers that are subscribers pretty religiously. It's, this isn't the typical exercise equipment that turns into a dirty clothes hanger, and that's good for the company long term. So I think as a strategic partner, as a potential acquisition, or as a investment for one of these companies, I think Peloton makes a lot of sense. So it's going to be a very tumultuous week, I think, for Peloton.
Andy, if this weekend taught us anything, it's that an 80-to-1 shot can still do well in this world, right?
Yep.
Hey, so if you look at a company like Peloton, and connected fitness, of which they are a leader, isn't going anywhere, and
right.
The growth numbers have come down, and they had too much inventory that they have to work through, but now some people are starting to think that the growth is going to be a little better than expected. You're right. They've got to give us a story going forward that shows hope for the future. Because let's face it, this connected fitness, there's margins there. There's ways to make money. And the fact that they continue to make people happy in a business that has good, healthy margins still has a promising future. But Andy, this stock is half its IPO price. So they're showing some serious mistakes have been made. But here's the question to LikeFolio. Is this worse or better than an 80-to-1 shot, Andy?
I think it's better than an 80-to-1 shot, but I don't know how it gets any better than what we saw on Saturday. You know, a lot of times, I will say, our data is pretty negative going into this earnings event. You know, and our earnings score for this earnings event is negative or bearish. But just speaking as a trader that's been around like you guys for multiple decades on this stuff, I will say that there is a point where sometimes, you know, bad news can hit a stock, and that kind of washes everything out, and you can get those types of reversals higher. Or the same thing happens on the high side. It's like when something moves this far, this fast, it's difficult to bet significant amount against it. You know, I think that's where you guys come in, making sure that you know, risk is well defined on these types of trades that we talk about on this show. But you know, we do show that this company is going to have a tough time putting together really any impressive numbers. Perhaps other than retention. That's the one story that I would stick to if I was this executive team for sure. But you know, long term, I like this company a lot because I'm a user. I see the data at LikeFolio. They make their customers happy, and they have a high margin subscription business. It's just they got a lot of pain to work through, and we may be at max pain point right now.
Yeah, I think the stock price is telling us that for sure, Andy. But when you look at it, and I kind of wanted to go back to that, you know, the hook that they get you with, and then people that have it really enjoy it, right? So that sticks out to me. When you look at, you know, that they might be exploring a potential sale of 15 to 20% of this company, when you look at that retention rate, that's important, right, for a lot of other companies. And I think mismanagement of this company over the last 2 years through the pandemic did not help the stock price at all. But what kind of companies out there do you look at that are stable, that have an ecosystem that would be ripe for, you know, this isn't a takeover, this is an investment?
Oh, yeah. I think the one that makes the most sense to me is Apple, although I think Apple likes sitting on piles of cash more than they like acquiring companies. But that type of ecosystem, that kind of marriage could do extraordinarily well because those companies are very similar in terms of how happy they make their customers and I think Apple could really help turn Peloton around from a production and logistics standpoint and tie in that whole ecosystem. Apple doesn't really have anything other than a watch and some content, and having access to an equipment maker like Peloton, I think, makes sense. Another name that's been thrown around is Amazon, and then also some private equity firms. I think the sexiest, most compelling partnership would be Apple. That's the type of thing that could get this stock not just turned around, but explosively, potentially higher. But other than that, you know, I think they're kind of in a desperate mode right now. And we'll have to see how it goes. I think that will be the one question that's at the forefront of investors' minds on this call. But the other thing I'm going to be looking at very, very closely is that retention rate, because I think that's the critical piece. Can Peloton survive an active, healthy, return to work, return to the gym type of society? We know what they did well when people were scared to go to the gym or couldn't. But, you know, how do they do in this year following that, especially as many subscription services are getting cut across households across America?
Yeah, and they're also rolling out that major brand refresh that came out this morning, Motivation That Moves You, something along those lines. But I'm also interested in seeing if they see any pickup in demand due to the fact that now that they have that all-in thing where you pay for the subscription and you're basically buying into the bike over a specific amount of time, 2 or 3 years, where they kind of lower that pain point for people to get into this product. Because as you mentioned, it's a high-priced product, and inflationary pressures, it's not immune to that. But if you had an earnings score on this one, Andy, out of LikeFolio, what would it be?
We're negative 68. We're pretty bearish on this, but again, you know, this has the potential to be a washout type of trade where, you know, I'll lean on you guys to help create a defined risk trade that we're not just risking too much, because there is always this possibility of a massive turnaround, even on bad news.
Oh, that's right. All right, good stuff as always, Andy. Appreciate it.
Thank you.
All right, that's Andy Swan, co-founder of LikeFolio, breaking down the data for us on Peloton.